Good afternoon, everybody, and welcome to the LendIt Fintech Weekly News Roundup. My name is Peter Renton, Chairman and co-founder of LendIt Fintech, and I'm joined today by my good friend and colleague, Todd Anderson. How are you doing, Todd?
I'm good, Peter. How are you?
Great. And our special guest is Andrew Dix, the founder of Crowdfund Insider. How are you doing, Andrew?
I'm doing well, Peter. Thank you very much. Good to see you,
have
Todd.
you back. Great to have you back on. Yep, let's get right into it. We got a lot to cover today. First, let's start off with Plaid. They just announced this morning that they are pushing into the payments business. Not a huge surprise. This was talked about when the Visa acquisition was first announced almost 2 years ago, and now they've created. I guess it's a product, but it's teaming up with a whole bunch of different payments processes to do account-to-account payments. So basically, when you go to checkout, you're going to be able to have, pay with Visa, MasterCard, or Amex, or pay with your bank account kind of thing. And that's going to be, I think, it's a real. I mean, it's hard to overstate, I think, how big a deal this is, because Plaid is connected to pretty much every bank, and it's going to make one of the things about bank payments is it's always been a lot of friction, and they can put it in with very little friction. It's going to be big. What do you guys think?
I think if I'm Visa, MasterCard, Amex, I mean, this is a direct shot at a lot of the fees that make up their business. Obviously, I think those companies are thinking of ways to innovate as well, but for the businesses and the consumers alike. And recently, I mean, here in New York, there's a lot of businesses, especially the smallest ones, where they have that little sign up like, if you pay by card, it's 3% extra in terms of your total bill, and they're basically pushing people to use cash so they don't get hit on the side in terms of a fee. This takes that away, and obviously that then takes that fee away from whoever the merchant network is, and so I think it's a very interesting deal. I think announcing it with all those partners and everything. I mean, they announced it, and it was not just, hey, we're doing this. It's, hey, we're doing this, and here's the litany of folks that we're already lined up with. And by the way, we're connected to 11,000 banks. So I think it's a pretty big move by them. I'm curious to see how the whole payments networks end up shaking out over the next few years. You have Square have kind of tried to close in their network, and then you have PayPal and their network, and you have Facebook launching with Novi and stuff like that. So it's basically the payments network universe has gone from 3 to like 6 or 7 big players in the last couple of years.
Mm-hmm. Yeah, I think that it's a natural step for Plaid. I mean, first of all, I think very highly of Plaid, and I'm sure, Visa is very sad that they weren't allowed to go through with the acquisition. Right. But it's a natural step. It's kind of a no-brainer. I think it's just emblematic of the importance and size of the payment infrastructure and the need for disruption and an overall improvement to the existing rails. And as you guys point out, there's a lot of intrinsic friction today, and it creates an opportunity for an innovative provider to remove that friction, create more value for users and for consumers, and do it in a faster, better, less expensive way. It makes sense.
Yeah, and there's one thing before we move on, I'll add that small businesses is also, this is a huge deal, I think, for them. I mean, I remember when Australia went to account payments, it's like 15, probably 20 years ago, something somewhere in the 2000s. And I know with my brother's family business, we moved to like 50% of the customers that used to, a lot of them was paying by check, some would pay by credit card, but they were moved to bank account to a bank account. And it just was a pretty quick and sudden shift. And because particularly when the accounting software made it really easy, that the small businesses is also going to be in play here for sure.
It also makes me think by the time FedNow launches, they'll be so far behind.
Well, yeah, I think that's an interesting point, because a lot of the payment rails today are private.
Mm-hmm. Yeah.
And there's a solid argument that it should remain that way. But that's part of also the whole stablecoin CBDC discussion as well. I think a lot of people view stablecoins as just another payment rail that's in desperate need of some regulation.
Right. Okay, let's move on. We're going to talk about Bitcoin and Bitcoin futures. We probably have seen earlier this week the SEC, I think it was last week, the SEC that said they would allow the Bitcoin futures from ProShares to go ahead, and it launched on Tuesday. I haven't actually looked at the stock price today, but it had a pretty successful launch, one of the most actively traded ETFs out there, and bullish for Bitcoin. Bitcoin reached a record yesterday on the heels of this announcement, and it's it's just it's yet another kind of feather in the hat of crypto. It's really been they've had some sort of turbulent times, but this it's inevitable. There's going to be an actual Bitcoin ETF. This is a futures ETF, but I feel like that's it's a big deal for Bitcoin.
Go ahead, Todd.
You first.
All right. I think that it's a step in the right direction for the crypto advocates, but it's not a spot-based ETF. And there's been a lot of discussion about the merits of having a futures-based ETF. Honestly, I think Gensler doesn't like it. I don't think he likes it at all. I think the fact that it's already a regulated product, because Bitcoin futures already traded on the CME and CBOE, it's hard for him to say no.
Right.
And I think that if he had his druthers, he would have said no, but it was something he just couldn't avoid. I do think that there's a greater likelihood now that a spot-based Bitcoin ETF will come to fruition. I think it does drive retail interest higher. At the same time, if you're relatively sophisticated, you can go buy Bitcoin on SoFi, Robinhood, Coinbase, any number of other platforms, and probably cut out some of those ongoing fees. So
right.
A single asset ETF. I'm not so hot on it, but yes, it'll be big for Bitcoin, and this one has heightened interest and media headlines on it.
I feel like it was a move that they were okay with doing. At the same time, they've been very I guess antagonistic is a good way to put it. Towards
you could say
space.
Antagonistic, yes.
And
that's a good word.
I feel like this is one way to say, hey, we've done something in the lowest risk possible way. And it actually hurts some other things in the near term because they're going to say, let's see how this plays out over time. And I personally don't think it really changes much in how the SEC views crypto. I think it's a big moment for crypto, just generally. And I think some of the other stuff going on in the space that we'll talk about later is bigger in terms of retail adoption and retail awareness of it. But I do think this was kind of the SEC trying to have it both ways. Like, hey, we've given you something, but we're going to keep moving the posts in other products. That's at least how I saw it, because it doesn't seem their stance overall hasn't really changed.
Right, so the goalposts they can move them again at any time. Anyway, let's talk about Facebook. Facebook selected Coinbase as their custody partner. Paxos, the stable coin. The Novi users. Novi is the Facebook digital wallet that's I think it's already in like alpha testing right now. And they chose. It's interesting that Paxos is not one of the big stable coins. It's not USDC. It's not USDT. USDP, as in Paul, as in Paxos. But it's they've chosen that. They said they really wanted something that was 100% backed by actual cash and cash equivalents. So it's Facebook continue to move forward.
Yeah, well, first of all, I'm not a big Facebook fan, but
Who is?
but I think it's has the potential to be a good move for Facebook. That being said, I think Libra was a train wreck, and I really don't think that they had a good grasp of what they were doing, even though they had some very, accomplished and intelligent people running that show. It just made no sense. I mean, they ran into a regulatory brick wall on that. And over time, they've scaled back their ambitions as they had to. And Diem, which they say they are still committed to, is in effect a stablecoin project that that they say is going to eventually be a digital dollar if they can get regulated. And so many policymakers don't like Facebook. I don't know, maybe a bit of a stretch. Now, Paxos on the other side, it's a firm that I think is awesome. And they are more of an infrastructure provider, and they work with some really big, fintechs like PayPal. I think they power PayPal's crypto back end stuff, and they know their stuff. They're regulated. They were compliance first. So I think that was a smart move for Facebook to get out in the market with a payments process. Nuvi's a digital wallet. There's umpteen different digital wallets. They said it'll be connected with everything. It makes a lot of sense. Will they make that next step to have Diem actually be a stable coin? I don't know, but I think this is a good move for them. And of course, they've got hundreds of millions of users on WhatsApp and Instagram, and of course Facebook. And it's a big step for them into fintech.
Yep.
I think Facebook keeps changing their mind, and
changing their name next. Yeah,
yes, exactly.
I think overall, I think it's they're trying to figure out where they fit best in the space, and I think I think they got themselves in trouble with that whole Libra launch versus they could have been doing some of this stuff just in the background, doing small announcements, small iterative things versus like this huge splash, which then backfired. And they've kind of gone backwards since then versus, hey, here's a little thing. And our perception of it would have been, hey, they're building to something here versus they splashed, got knocked down, and now they're kind of renaming things, kind of jumping around. That's the way I view it. I feel like they've gone the opposite way.
Yeah. Versus creating a global non-sovereign currency that was in effect a security, via the regulations in the United States. I mean, what were you thinking? It just and it was misguided from day one. That's my opinion.
Yeah, and since it launched, the Facebook brand has actually suffered much worse in the eyes of regulators with a lot of the things that have happened. So,
when was the last time Facebook, when you saw them on CNBC or whatever, that it was for a good reason? That tells you a lot about Facebook. I mean, even this morning they had news that came out that the way that they exempt certain high-level users wasn't clear, according to their the whatever review board or whatever they call it.
Right.
Yeah, people are already mocking the name change, calling it Boomer Book or Woke Book or whatever.
Yes. Whatever the name change is, people are going to crucify them for it, no matter what. Anyway, let's move on. Want to talk about PayPal, and this was not on my M&A bingo card, but PayPal they're in late stage talks to acquire Pinterest. And I haven't logged on to Pinterest in years. Not that I was ever really a heavy user, but I went on the site yesterday, and it's basically the same as what it used to be. There's a few more ads and stuff, but they're talking about $39 billion for Pinterest. And they're saying that Shopify is applying pressure to PayPal is really hasn't got as much in the way of like social commerce. I don't know. I feel like this one doesn't seem like a natural fit to me. What do you guys think?
I mean, I agree. It doesn't feel like a natural fit, though. And how I understand Pinterest, I mean, this is basically through how my wife uses it, is there's a lot of like small, especially like more sole proprietor types that use it to essentially get the word out about stuff that they're doing, whether it be designs for things that they make, like pacifiers for kids, or t-shirts, or little side hustle type things. And I guess you could relate that back to they need payment mechanisms, and connecting that through PayPal. I certainly think the social commerce thing has an angle to it. I mean, it still doesn't feel like the perfect fit, but there's so much happening right now. Sometimes we don't see it at the start, and then all of a sudden in 2 years it's this great product that PayPal has re-engineered. So I don't know, they must see something there, and PayPal usually makes smart moves.
So I'd look at it slightly different. I look at it as a foot in the door, because Pinterest is the cheap kid on the block right now. I don't know how
$39 billion cheap kid.
Well, yeah, but you look at how much Facebook paid for its acquisitions, like Instagram and WhatsApp. The thing is Instagram or Facebook is moving into payments and fintech, and PayPal saying, wait a minute, these guys are moving in on me. I think I need to move in the other direction. So they acquire an established social network that has some cool features and functions. And then, like everybody else, you start rolling them out, new ones, adding new features and functionality. If you look at how quickly TikTok evolved, and Snap, which is the choice of a younger generation, it was pretty amazing. But they've always been very iterative, to the point that everybody else has to say, hey, what are they doing? I need to copy that. So I think, for PayPal, in a lot of ways, it's the meshing of, social communication with financial services. Kind of makes sense.
Well, we'll have to see if they can actually monetize it. Yeah. And, because this whole social commerce space is really nascent and barely even going now. And a little bit, when you, that's what the commentary that I've read is that it's really about that piece. But anyway, let's move on. I want to talk about the New York Attorney General, who I think has screwed up, to be honest.
She's running for governor.
Yeah, well, she sent cease and desist to 2 crypto lending firms this week. Everyone thought it was like Nexo was one of them, and they don't even offer the product that they were that they were told to cease and desist. That was pretty easy for them, because they said they don't offer it.
They must have got into their brains and said they're in the future they're going to offer this. We'll just send it to them right away.
And then like Celsius was the other one that everyone said, and Celsius apparently did not receive a cease and desist. And I spent like 15 minutes this afternoon before we came on the air and tried to find out who were these companies that were sent it, and they're still it's been kept pretty tight. I mean, I would have thought BlockFi would have got one. They haven't been mentioned. I mean, they said 2 cease and desist letters and 3 letters for people companies requesting more information. And we know that Nexo and Celsius were 2 of them. We don't know who the others are, and it's a little bizarre to me, the whole this whole process, this whole episode.
Feels like the regulators are like, shooting shots across the bow, and then like, oh, we'll just worry about the details later. When in reality, I mean, they, this is pretty simple stuff. Like, this is who we want to send these letters to, sent, and it seems like they're not aware of what some of these companies do. It's like amateur hour, and
the people they found out the names of the companies by the file name. It was redacted, but the file name had the company name in it. So, that's bizarre. That feels amateur hour, as you say.
Yeah,
I think that they know who these people are, but they don't care. I think it's the memo's been distributed from Washington D.C. on down, and people are just kind of falling into line to act out what is policy. It really was. I think it was Gensler who targeted crypto lenders, and the fact that he said there were securities and they needed additional regulation. And I think for Letitia James, who clearly has aspirations beyond Attorney General of New York, and I would expect that she's profile enough that she would run for governor at some point in time. It's a layup for, because most people don't understand this except for the people on the inside. They paint it up, and we are protecting investors, the little guy, even though I've never read anything about anybody complaining about earning 8.25% on a savings account when you get a negative real rate of return in a bank. I mean, I just, I'm like, who's the bad guy here?
Right.
It doesn't really make sense, because they're not, FDIC insured, but that going in. And if you're holding BTC or Ethereum or something, and you want to park it, and you want to generate some return on that, or USDC or whatever, it makes a lot of sense. It's a no-brainer. And platforms like BlockFi and some of these other places have always been compliance first. They've always been out there about we want to be a regulated financial services firms, laying the groundwork for the bank or the service of the future. It makes a lot of sense. So when you have a politician like this really gunning for a service that I don't see really causing any harm that I'm not aware of, it just smacks of politics, partisan politics.
Who's complaining? Where's the harm? Who's because most of this stuff is, I would have thought, are people complaining to the New York Attorney General or anyone, or the CFPB or anybody, saying, "Oh my goodness, this is wrong. I shouldn't be allowed to do this." It's just it feels kind of
goes back to misunderstanding of the actual products, politics, as Andrew said. And also the simplified nature of, it's not FDIC insured, so how do we deal with that? Well, if no one's complaining, they know the risk going into it, that it's not FDIC insured, but they're willing to take that risk to make that 8%. Okay.
Yeah, makes sense.
Yeah. It goes back to the problem is you elect somebody to be a representative or a senator or whatever, and then they go there and they legislate. And that's where the problem lies, because instead of removing rules and friction and reducing regulations, they go and create more. And that's how they show that they are effective, and how they accomplish, what they set out to do, and how they get reelected. And it just creates a poor motivation for public officials.
Right. Well, that's a whole nother can of worms, which we're not going to open.
Don't get me started.
Yes, I know. I know. Okay. So next up we have Pimco, which they're the world's largest fixed income asset manager, and they are now dabbling in crypto. I don't know what Bill Gross would have thought, Mohammed Al-Arian, but those guys are no longer around for Pimco, and they're now they're going to do it gradually, and you can see it. It's driven by their investors. It seems like this is
the type of firm that when they get involved can help change the minds of regulators, and because they become powerful enough when banks start getting into this in bigger numbers, then the conversation shifts to, it's this community over here, they're startups, they're kind of on the edges of the financial system. No, these are the players in the financial system. So when stuff like this starts to happen, that's when the crypto community should be like, all right, we need to lean into how can we get more Pimco likes, to begin to dabble, so they can get on our side, because I think that's when the bigger change happens. And it's clearly it's a natural evolution of, hey, we're being asked this, so we need to find out how to best get involved.
Mm-hmm.
Yeah, I think when you have somebody the size of Pimco, which has over $2 trillion in assets under management, which is pretty big, making a move into crypto, it says something. And the CIO who went on CNBC to discuss it said, "Look, we're getting demand from our investors. It just makes sense. But clearly they've started and they're doing more. They're dabbling in. I think most of what they're doing right now is for the hedgies. But in a diversified portfolio environment, crypto is becoming a recognized asset class that you can use to not only to hedge, but to speculate and perhaps invest. And it just makes sense. Pimco is another stamp of approval from the old guys of finance.
Yep. Okay, moving on to new guys in finance, FTX trading. We've seen, and many of us have seen the ads with FTX. It's got Tom Brady and Giselle, and it's actually quite a humorous ad basically promoting FTX. Tom Brady has some equity in the company, and I'm looking at the piece that you wrote, Andrew, earlier today. I was actually blown away by some of these things. It's just amazing. Like, they founded it 2 years ago. They upped their regular Series B is now $1 billion, and now this Series B1 is another $425 million at a $25 billion valuation. I mean, this company it's just staggering. This would have if you told me this 10 years ago that a company would be founded and then do something like this 2 years later, I said that's just simply impossible. You can't do that. But it's happening.
Yeah, I think the founder, Sam, is just he's brilliant. He really, looked at what was working, what wasn't. He had the toolkit, the horsepower to do something, and he did it. And there's something to be said for execution, and they're doing what's right. You can see that in the growth numbers, and the fact that you raise money at that type of valuation in such a short amount of time. You're right; it's staggering, absolutely staggering. I thought it was interesting to note that they have offshored operations to the Bahamas, which in my opinion highlights a deficiency in the U.S. regulatory environment. Now they still have FTX.US, where they've got like kind of a scaled down version of it. But I think it just points to the fact that the U.S. has been behind on this, and I think they should do a better job of getting ahead of facilitating innovation, but keeping it regulated, as opposed to regulation by enforcement and pumping the brakes too often when they should be hitting the accelerator.
I mean, you've seen him. I mean, they've been everywhere. If you watch any of the baseball games, I mean, it was one of the first playoff games on Fox, and they had there was an FTX guy who had like the wooden head or whatever, and he was moving around the ballpark, and Fox kept going to him, and then there would be an FTX commercial every break. And that's how you get mass market, is get on the baseball games, the football games, where people are the weekends, and you get in front of people, and then people start Googling what's FTX, what's crypto. And
you remember, was it last year or this year that they got the naming rights for the Miami Heat stadium, Coliseum, or whatever it's called. Yeah. When they did that, I was like, huh? Because it was American Airlines who had it before, and now we have a crypto exchange. It's pretty incredible, and they've signed some other branding promotional agreements, which are pretty cool too.
Yeah, I go back to when it first happened with SoFi. It was like, why? This is some crazy. The Super Bowl's there this year, and you can't get away from the word SoFi during an NFL game.
Yep. Well, the Rolling Stones just played there like a week ago. It's just, SoFi is everywhere right now.
160 million people watch the Super Bowl, so they'll be hearing SoFi. 160 million people.
Yep. Anyway, we're almost out of time. Last story I want to talk about, another fundraise. N26, Challenger Bank. They operate here in the US. They're not that big, but they raised $900 million at a $9 billion valuation, which ordinarily that would blow us all away. But of course, these days that's just a regular run-of-the-mill digital banking funding round, right? But
seed round,
it's, well, this is a very impressive round, but it's not unique anymore. And the interesting thing that they're refocusing on the EU. It's what the articles that have been out there talked about, and getting ready to IPO 3 to 4 years down the track. So
I thought, Peter, you maybe it was in one of our many calls that we have every week, and you were like, we thought N26 was kind of on the downside. They had left the UK. They haven't really taken off here in the US, though. I think they've done some better things in the US than maybe they get credit for. It's kind of more under the radar. They haven't made as splashy a move into the US, but then they raised the round, and you find out 7 million customers in 25 countries, and now they have clearly plenty of cash to double down on Europe, which is obviously where their initial market was. So clearly they're not dead.
Yeah. and we keep seeing these. We don't think the funding rounds can get any bigger for a digital bank or neobank, but they do time and time again. It's pretty incredible. What I find interesting, because domestically within the United States, is I think it was Monzo and one other announced that they were no longer going to pursue a federal bank charter. And I think that has to do with the transition in administration, where you had the OCC was at one point much more open to innovation, and now they've transitioned to someplace else. And I think that's going to cool down banking innovation for a while. And I think that's unfortunate. I do think for the providers, the true digital banks that have a federal bank charter, that creates a bigger moat for them and an opportunity to do more, because you aren't going to have these other people, nipping at your heels as soon as I anticipated. And I think that bodes well for Avero. It bodes well for Lending Club and Bank. It bodes well for Marcus. I mean, these people that have a bank charter minus any bank branches, it's a good position to be.
Yep. Yeah. Well, I recorded a podcast earlier today with Gary Reeder from the American Fintech Council. His reading on the OCC was that bank charters for fintechs dead for the time being. So
it's dead for the time being. And if I can't think of her name right now, the person that they've selected or appointed to run the OCC actually gets approved in that role, that will be disastrous.
Right. Yeah. Anyway, we've run out of time. Andrew, thank you very much. Todd, it's always a pleasure. Andrew. And we'll be back same time next week. Before I go, though, one quick reminder to everybody. Latin America is still the hottest region on the planet when it comes to fintech. We have LendIt Fintech LATAM happening December 7th and 8th. Go to lendit.com to find out more. With that, we'll wish you all a good afternoon and a good weekend. We'll be back same time next week. See ya.
Thank you, everybody.